Hello and welcome to Morning Brief Market Sunrise. I'm Jared Blikre, live from Yahoo Finance's headquarters in New York. It's Friday, August 29th, the final trading day of the month. Coming up on the show, we have the legal battle between Federal Reserve Governor Lisa Cook and the Trump administration heading to court today. We've got the latest on the escalating tensions and what it means for the future of Fed policy. Plus, the tech is underperforming in the early action, and that's largely from weakness in Dell and Marvell Technology. We're going to explain the moves. And get ready to pay more for the cheap stuff you like to buy online. A tariff exemption just expired overnight. What it means for you ahead. We are kicking off the three things you need to know before the market opened today with the latest Fed fight. It's going to court. Fed Governor Lisa Cook is suing to block President Trump from removing her from the organization that sets interest rates and monetary policy in the U.S. There's a hearing today following a second and new criminal referral over her past mortgage, which was filed by Trump Housing Director Bill Pulte. Cook denies wrongdoing and says she won't step down. The headline here is Fed independence. It's a rare, messy clash between the White House and a sitting Fed governor. Markets don't trade every legal twist, but they do watch the optics. And if this turns louder, it can color interest rate expectations and risk sentiment for global markets. But for now, the base case is no immediate policy impact, but the story is live, and we're going to update you as the court moves. And next up, we have markets hovering near records as the Fed's preferred inflation gauge, personal consumption expenditures, or PCE, is set to drop at 8:30 a.m. Eastern. The report will be a temperature check on prices before the next Fed meeting in mid-September. And the twist, Governor Chris Waller just said he supports a September rate cut, with more possible over the next 3 to 6 months if the data cooperates. After Fed Chair Powell's dovish speech at Jackson Hole last week, bond investors have fully priced in a Fed rate cut of 0.25% at the meeting in just a few weeks. And the setup is simple. A cool inflation number reinforces that cuts are coming, that narrative, and it tends to favor risk. A hotter print challenges the storyline, which can lift yields and take a little air out of the stock market rally. We're going to be tracking the reaction all morning for you. And finally, an obscure rule exemption for shipping packages with big ramifications for consumers. It just expired at midnight earlier today. The so-called de minimis rule allows low-value packages from overseas to slide into the U.S. tax and duty-free. Now, that exemption is history. Officials say the change is permanent, and some international carriers, including big European postal services along with DHL, they have already paused or adjusted U.S. deliveries as they rework their systems. What does this mean for you? Buying cheap goods overseas becomes more difficult and less attractive, as higher checkout costs make them less competitive. Also, expect some delays on many orders as shippers sort it all out. The implications for global trade could be huge with the end of the de minimis exemption. Sonia Lipinski, who's a partner and managing director at Alex Partners, explained what it means for shoppers on Market Catalyst with Ali Canal.
So for consumers, consumers who are used to buying really cheap apparel and other goods, they're going to see a significant increase in the cost of that. For retailers in the U.S., however, it actually can be seen as a bit of an advantage. A lot of them who are selling similar goods, they're importing in bulk, so they're paying the duty on everything coming into the U.S. and then shipping from distribution centers. If a competitor is shipping direct with no duty, then the retailer in the U.S. is at a disadvantage. Now it's going to level the playing field a little bit. Even Forever 21 mentioned when they went bankrupt back in March that this was the de minimis was a significant contribution to why they were losing market share because they were competing directly with Shein. So for those that are in that same kind of competitive pool, they actually have more of the benefit is equalized.
You mentioned Shein, and Chinese retailers like Temu, Shein, they lost their de minimis relief back in May. So this is not China, this is Europe. But what's the fallout been there, and what lessons could U.S. and European retailers take from that experience?
Yeah, well, I think we're going to have to see, pricing is generally, we think, is going to go up across the board. Consumers have already started to see some of those price increases in stores, even this summer, but we really expect them to hit in the fall. Now to some of the top market-moving stocks of the day.
First up, we have Alibaba, the Chinese e-commerce giant, reporting earnings, posting a surge in sales in its cloud computing unit. But overall revenue came in shy of analyst expectations, as profits did too. The company's online commerce business is struggling amid increased competition and a choppy consumer demand. But the news driving the stock action this morning to the upside, the company reportedly developing a new AI chip just ahead of the results. The Wall Street Journal said that the new chip is more versatile than previous chips that the company had made. The goal is to fill the void left by NVIDIA being restricted from the China market. Alibaba had been one of NVIDIA's biggest customers. And meantime, Marvell Technology shares are sliding ahead of the open today, and the chip company's second quarter results coming in line with analyst expectations, down about 13% in the pre-market. But its third quarter outlook came in below consensus. The key area investors are eyeing, data center demand guidance, it fell short of high expectations, and it's the latest sign that the surge in AI-driven growth is starting to slow. And it follows NVIDIA's results this week, which showed data center revenue missed estimates. And on the earnings call, Marvell CEO Matthew Murphy said data center revenue in the third quarter will be flat from Q2. The next look at the chip sector comes next week when Broadcom reports, and you can see the chip stocks are falling in sympathy. And shares of Dell also under pressure. The tech company posted better than expected second quarter results and raised its full year outlook, but the company's profit guidance for the current quarter missed estimates, and that's weighing on the stock this morning. The company is saying it still sees strong demand tied to artificial intelligence, and it plans to ship $20 billion of its AI servers in fiscal 2026, double what it sold last year. And coming up on Market Sunrise, we're going to hear from the White House on the latest round of economic data and where it sees growth coming from. Plus, we've got a look at some of the other top movers of the morning. Keep it right here on Yahoo Finance. Welcome back to Morning Brief Market Sunrise. Taking a quick look at the futures, we see they're down across the board in the U.S., but just slightly. And investors are waiting on key economic data this morning, the July PCE reading. This coming after the second quarter economic growth was revised higher to 3.3%. And Counselor to Treasury Secretary Joe Livornia, he weighed in on the report and what's driving the economy, plus the tensions between the Fed and the White House with Yahoo Finance's Jennifer Schonberger.
We were very excited, Jennifer, to see that the upward revision came in CapEx, capital expenditures, or what's simply known as business investment. It was just under a 14% pace in the first half of the year, and now it's running over a 15% pace, highest in about 14 years. You mentioned AI, that's certainly part of the story. We call it a CapEx comeback. It basically started when President Trump took office, and in his foresight, the One Big Beautiful Bill was set up to make capital expenditures retroactive to Inauguration Day in terms of full expensing. So if you buy a new piece of equipment that you're going to use to make your workforce more productive so that you can make more money and you can pay your workers more, you can now fully expense that 100% against your income as of Inauguration Day. So that was a real nifty part of the president's One Big Beautiful Bill that got this CapEx spending boom going. The numbers look better, as you said, in the Q2 revision. Bodes very well for the second half. And most importantly, we're looking at a really, really strong 2026.
Well, that leads to my next question, which is, are we just at the beginning rounds here for CapEx as a whole? As you know, you mentioned 100% expensing for PP&E, as well as factories, backdating to the beginning of the year. And also on that AI piece, the fact that we have been seeing big tech companies in America investing in AI the past couple of years, are we just starting to see the beginning ripples of that?
Yes, for sure. And by the way, the AI is certainly one of the strongest parts, but transit equipment, there's a lot of other industrial equipment. You know, we're seeing a CapEx boom across the board. It's just that it's the strongest in AI. We're seeing software, of course, do really well. The CapEx trends bode very well for the labor markets. And the other part of the One Big Beautiful Bill is the 100% expensing for factories that you mentioned. That's never been in part of any bill before. So the forward, in other words, if you look at, okay, the bill was signed in record time on July 4th, which is what the president wanted, that now provides a great glide path or a great trajectory for growth next year as now we start to build these factories with American workers, and then when the factories are done, they're going to be employed with Americans, earning very high wages. So the best stuff is yet to come in this bill, and 26 should be a banner year for growth.
To your point, we saw weaker payrolls growth for the month of July. given the CapEx and the outlook that you've just put forward, do we expect to see a rebound in job growth as we get into the latter half of the year?
Yes, absolutely, because in the past, we've always seen job accelerations occur when CapEx happens first. So you get more capital, the capital then goes to the workers that are there, that creates more profits, allows those workers to be paid more. As companies make more, they expand, and it becomes self-feeding and self-sustaining.
Switching gears a bit, Fed Governor Lisa Cook officially filed a lawsuit today in D.C. federal court contesting President Trump's firing of her. In her 24-page lawsuit, her lawyers argue that the administration's allegations of mortgage fraud don't satisfy the for-cause clause. But I don't think there was a denial of those mortgage fraud allegations in that lawsuit. Your reaction, the administration's reaction?
I mean, for cause is a general term and it's there for a purpose. And it would seem to me if these allegations are true, then that's certainly for cause. I mean, the courts ultimately obviously are going to decide that, but it doesn't look good.
So do you think the government will end up having to appeal depending on with the choice
Well,
of judge?
We'll have to wait and see, but I think there's certainly within the president's prerogative and power, if there's something done for cause, then that person should be removed.
And we do know that Lisa Cook put in for a restraining order. Typically those are for 2 weeks or so. We're going to be bumping up against the next FOMC meeting on September 16th and 17th, so very close here. If these legal proceedings are still ongoing, how does that bode for the next FOMC meeting?
Well, Secretary Besson has said, he'd like to see the Fed do an internal probe, and the administration really wants to bring government accountability back. And these are one of the things right now that perhaps doesn't look so good for the Fed, but we'll have to wait and see, Jennifer, how this plays out. Unfortunately, the transgression that appears to have occurred doesn't look good, and we'll have to see how the courts weigh on it. But I understand where the president's coming from, and we'll hope the people involved do the right thing, but I'm not sure that's going to happen.
Treasury Secretary Scott Bessent has said that interviews for the next Federal Reserve Chair are going to begin post-Labor Day. What is the administration looking for in the next Fed Chair? What can we expect?
I think the Secretary certainly wants to have the Fed rejigger to not have this mission creep where you've got climate change and inequality and things that go way beyond the purview of the Fed. So the person coming in, how do they think they could change the system? How can they improve the forecasting process? What do they think about the Fed staff, which seems to be very monolithic in terms of how it approaches the inflation process? They're very Keynesian, or what's known as output gap centric, very demand focused. They believe that demand is what drives inflation when really it's a monetary and credit phenomenon. They clearly have gotten it wrong on the tariffs. Again, because of the metrics they use, they may not have been so forward-looking and accurate as the president was and as Secretary Bessent highlighted. So it's really going to be, how do you have a wholesale reevaluation of how business is done and taking the Fed back to its initial roots and charter of focusing on the economy, low and stable inflation, strong growth, and moderate interest rates. So those candidates will have to see what they have to say, but the Secretary will be looking very closely to see how they want to change things.
Coming up on Market Sunrise, a look at some of the day's top trending tickers. Affirm shares are soaring ahead of the open. What the results say about the health of the consumer. Plus, a new warning from Caterpillar. The company expects costs to rise thanks to tariffs. We have the details straight ahead. Welcome back. Let's get to some of the trending tickers today on Yahoo Finance. First up, we have Caterpillar. The industrial giant is falling in the pre-market trading after a new warning on financial hits that it expects to have from tariffs. You can see it's down about 2.7% right now. And for the third quarter, it sees the net impact to be between $500 million to $600 million. It now sees costs for the year between $1.5 to $1.8 billion, and that's up from the previous range of about $1.3 to $1.5. And as a result, the company says its full year profits and those margins are going to be near the bottom of its earlier trading range, but it does not see an impact on sales. And one of the standouts in today's session, it is likely to be Affirm. That stock is soaring right now. The buy now, pay later lender swinging to a profit in its fiscal fourth quarter, and revenue was up a third from a year ago. The results coming in better than expected by analysts, and a key metric for the company, gross merchandise volume, it rose more than 40% from a year ago to $10.4 billion. And the analyst reaction to the report, good reviews. Truist saying the company, quote, cleared a high bar, and Mizuho saying that the outlook is a highlight, defying concerns about competition from Klarna and lost revenues from Walmart. That stock up about 15% right now. And finally, we are watching Ulta, also rising ahead of the open. Shares of the beauty retailer are jumping after a much stronger than expected second quarter result, up about 3.5% right now. Revenue and same-store sales all coming in well above analyst expectations, and the company also raising its full-year same-store sales guidance in a sign that consumer spending on cosmetics is holding up, and this is despite broader concerns on spending on items like groceries. The results are also coming after the company announced earlier this month it is ending its partnership with Target once the current contract nears its year end. Now, Ulta shares are up 23% on the year, and this is far outpacing the S&P 500. And it's been a busy week for the retail sector. We heard from names including Kohl's, Abercrombie & Fitch, Five Below, and Dollar General. James Geller, Rapid Ratings Executive Chair, spoke to Ali Canal on Market Catalyst and explained who the winners and losers are in this space.
I think we're in a place where we're seeing the larger companies with more staying power, bigger balance sheets, and larger footprints in a much better position than their smaller competitors. But this is definitely a time when I would say no one should rest on their laurels because we really haven't seen the full effect of tariffs coming through. A lot of the earnings that have come through so far in the last couple of weeks have been stronger than expected. Companies like Home Depot have done well. Kohl's did well yesterday, which was a surprise to, I think, many. Dollar General this morning did quite well. So I think we're beginning to see a period of time that we're going into where the larger companies are going to continue to do well for a while, but they're having to work extremely hard to do that. And by that end, what I mean is they're pulling out everything they can from their playbooks, particularly trying to work really closely with their suppliers and their supply chain and the providers of product that they're putting on shelves to get the best prices that they can, but to try to collaboratively work out how the costs from increased tariffs will be shared. It's not always being successful, and there's still a lot of pain to come, but we're going to hear a lot over the next couple of quarters more about that than we're hearing so far.
And you noted the success of some of those budget retailers like Dollar General, TJX. Your data shows that they remain in low-risk territory, but considering that tariff impact that you were just mentioning, how sustainable is that outperformance, and how are these companies protecting their supply chains?
Well, right now, the supply chains that are the companies that are doing the best with their supply chains are engaging with them, speaking with them the most closely, and trying to understand where those companies can share some of the cost increases. What we're seeing across industries, retail is just one of them, is this real schism between larger public companies and their smaller private company suppliers. And most Fortune 500 and Fortune 1000 companies, about 75% of their supply chains are made up of private companies.
We've got a deeper look at the retail space with Gap CEO Richard Dickson. He sat down with Yahoo Finance executive editor Brian Sozzi and gave an update on the company's turnaround. The company posted same-store sales that missed analyst expectations after the closing bell last night. The stock is edging lower ahead of the opening bell on Wall Street. And Dickson also weighed in on the tariff impact that the company faces. So be sure to tune in at 9:30 a.m. Eastern Time on opening bid. And our call of the day this morning is crypto. The regulatory weather in the U.S. is clearly shifting. The CFTC, which is a government agency that regulates futures, foreign exchange, and crypto, is telling crypto firms that have left the U.S. that they can once again serve Americans. That's if they come back under its, quote, foreign boards of trade framework, which is normally a door for overseas futures exchanges. And now it's a door for crypto platforms operating offshore as well. It's not a sweeping amnesty. They still have to play by government rules, but it is a public invitation, which is kind of unusual and I'd say unusual for a U.S. agency, and very much a sign of the times with more crypto-friendly administration in Washington. And why it matters? It could lead to more crypto competition for U.S. customers and also lower fees. Clearer rules tend to mean easier access and lower friction. And also looking back on the week, it was a weak showing for crypto assets after the Ether cryptocurrency failed to meaningfully break above its 2021 highs following the huge rally that Fed Chair Jay Powell inspired 1 week ago today. Bitcoin and many altcoins also joined the slump this week, and also I should say Bitcoin is currently trading just under the $110,000 mark. And a quick reminder from Thursday, the Trump family's crypto project American Bitcoin, it made headlines with plans to list on a U.S. stock exchange. And all in all, more signs that crypto is becoming enmeshed in the U.S. government. And now let's get a look at the market action around the world. We have Asia. We can see that the Nikkei is trading lower about 0.25% to 42,718. And meanwhile, in Hong Kong, we've got the Hang Seng up about 0.33%. And in Korea, we've got the Kospi to 3186. That's down 10 points, and that translates into about 32 basis points. Then looking to Europe, we have the FTSE, that's down about 0.25% to 91.20, or 91.92 rather. Then in Paris, we have the CAC 40, that's up or down 0.33%, worth about 29 points, and to the level 77.33. And then in Germany, we have the DAX, that's down about 0.33% as well, and that level is 23,948. Meanwhile, in the US, we have Dow futures down 0.33% as well as the S&P 500 futures seem to be kind of mirroring the action that we're seeing overseas, both of those down 0.3%. And the NASDAQ futures, those are down the most, down about 51 basis points to 23,647. And then also taking a look at Bitcoin, we've got that just above 110,000 right now, but it's still down about 2.61% after or over the last 24 hours. And let's get another read on the chip stocks here. We're looking at NVIDIA down almost 1 full percentage points to 178.35. Intel also down about 0.8% to 24.72. And it looks like we're also taking a look at some of the other action in software. Autodesk specifically, we have that was surging in the pre-market. Also taking a look at Dell and Snow, those are trading as well. There's Snowflake down about 1.23%. Well, that's going to do it for Market Sunrise, but stick around for much more on Yahoo Finance. It's a busy day ahead, from economic data to Fed Governor Lisa Cook's court hearing in her lawsuit against President Trump. And later in the day, furniture makers had a tough week after President Trump threatened steep tariffs on the industry. We're going to be speaking with an expert on investor plays now to make it right. And luxury sports car maker Porsche is returning to basics, gas-fueled engines. We're going to introduce you to its hot new model, the Cayman GT4 RS. These stories and more are coming up. I'm Jared Blikre. Go own the morning.